Hello traders and welcome to my video on a Bitcoin US dollar trading strategy. This is a very simple trading strategy that uses nothing but price action to help you capture some big moves like this one. Okay, so this is a Bitcoin US dollar 1 hour chart. I'm using the MT4 trading platform. You can apply this trading strategy to any trading platform. It doesn't require any special indicators. For me, price action trading is king. It tells you exactly what the market is doing at any given time. We don't rely on any lagging or repainting indicators. Okay, so we're just going to use support, resistance, and trend lines. You can use this on any chart time frame as well, and also any other trading instrument, Forex, stocks, indices, commodities, etc. I personally prefer the 1 hour charts and above, so the 1 hour, 4 hour, daily, weekly, monthly, simply because they contain more price data and therefore I find the signals tend to be more reliable. So this is how I trade it. It's very simple. What we want to do is we want to draw our support and resistance. So we have our resistance there, support here. Okay, so this is the first thing we do. You can see the price shoots up here. We have a pullback. Okay, then this level of resistance is formed. So what we're going to do is we look to enter a breakout. We're only trading long. Reason being is because the market's making these higher lows. Okay, so we know we're in an uptrend. You can visibly look at the chart. It tells you we're in an uptrend. We don't need any fancy indicators to confirm that. And then we just look to enter on a breakout of resistance in the direction of the trend. Okay, you can see this resistance 1, 2, 3, 4, 5, 6, 7 is been hit multiple times, so we know it's a strong level even around here as well. Okay, you've got the lower highs here. You've got your bullish candlestick patterns as well. Lots of bullish price action going on. If we want to zoom in closer to what's happening, we can see strong level of resistance here as well. Okay, look how many times that's been touched and have a nice wedge formation here. Price is moving upwards and then we get this big breakout candle there. So we could have an aggressive entry perhaps on this breakout, or you could have waited for a breakout of this resistance as well. But I just think both breakouts caused this momentum shift to the upside. Okay. And then we were in an uptrend. You could have entered there, stop loss just below the low here. So relatively close when you consider zooming out the overall picture of this move. It would have been a good entry using nothing but price action. You don't need a unicorn or crystal ball indicator to tell you how to trade, in my opinion. If you're just aware of support, resistance, trend lines, and you can time your entry, obviously have an idea of candlestick patterns as well, and most importantly, good money management, you can capture some big moves like this one. Okay, if you're an extra cautious trader, what you can do as well, if you don't want to take these perhaps aggressive entries or aggressive entry here, intermediate entry here, and you can be more conservative. So that's to wait for the breakout confirmation, then a pullback. Okay, you can see the pullback here, and then just enter on a breakout of the continuation. That resistance then becomes support. In fact, if we take it back, you can see it's more or less lining up with that resistance there. So we know it's a strong historical level. Once it's breached, it becomes support and then the price continues upwards. So that's another entry there. Stop loss again below the low. Okay. Simple as that, really. Just make sure you have good trading discipline. So don't let negative emotions such as fear, anger, greed get in the way of your trading. Don't revenge trade, don't FOMO, don't fear of missing out. Try to take a trade that's not there or take a trade in anger. There's always going to be opportunities. As I said, you can use this strategy on any trading instrument. The key is determining the trend direction and timing your entry into the trade. And then once you're in it, we want to let the profits run, okay, as much as possible. You can use a trailing stop. So just put your trailing stop below the low, 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 below the low. Okay, just to maximize each move as much as possible. We don't just want to, well, I personally don't just want to get in a good position and then exit, with a 2 or 3 to 1 risk to reward ratio. Okay, I'm not going to use a rigid take profit level. I'm going to give as much as the market can provide. I'm going to take as much as the market can give. Yeah, so cut losing trades short and let winning trades run. You can capture some big moves like this. And of course, we can also re-enter even if we are taken out. I mean, this move, if we had got in down and around here, we could have been in in for the long run. And again, you see these opportunities appear everywhere. You have another textbook example there. So we've got a support here. Okay, resistance here, which is pure price action trading. Okay, so we've got resistance, 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 resistance. It's quite a strong resistance. Okay, almost a W pattern formation there, or double bottom formation down here. And you can see this breakout to the upside could have been a good timed entry into this particular move here. Okay, all we needed for that was support and resistance. And as I said, trend lines. So the market is making these higher lows. We know it's going upwards and we can just time our entry on a breakout. Okay, we can also, if you want to be more aggressive, you can just go into recent price action and just look for more favorable entries. So this resistance level here. Okay, so if I can get that one, there we go. So we've got this resistance level in here. In fact, it was support back here. It's quite a strong level. You can see an M pattern formation breakout there. It holds up as resistance. Okay. Then once we get the breakout price, strong momentum to the upside. Okay, and especially after this breakout. So there's a couple of entry opportunities. This perhaps the more aggressive one. You could have even waited for that breakout and then entered on the pullback around here. Okay, which are bullish candlestick formations as well. Have a 3 inside up candlestick pattern here. So that's basically when you have a bearish candle followed by a bullish candle, which is at least 50% of the bearish candle, and then another bullish candle which breaks above the body of the bearish candle. Okay, so that is a strong bullish indicator. You also have one of those here as well. So bearish, bullish, bullish. So strong indications that we were going to see the move that did commence following on from that. There, again, bearish candle, bullish candle, 50% of the body, and another bullish candle which breaks above. So perhaps the more conservative entry, you could have waited for this breach of this resistance line. Market's making higher lows. We know we're going to look to long, but you don't want to enter in the aggressive manner. So you can just wait for the breakout. Then on the pullback, hop in on the pullback. This is when traders are starting to see the move there. They're getting excited and everyone's trying to jump on, get their ticket for the train and just ride it as much as possible. Okay. And what you don't want to do is you don't want to buy at the high after a move like this. Okay. Amateur mistake. You want to buy low, sell high. You don't want to buy at the high, sell at the low. Okay. If you do come to your charts and the price is up here somewhere, it's easy to think, oh, it's going up. But depending on your trading, if you're short or midterm trading, you want to wait for a pullback. I mean, if you're long-term trading and you're confident that it's going to go up in the long term, by all means, buy or sell where you feel like. However, I'm going to wait for a pullback, as we did with these other trades we've looked at. So how would we do that? Well, first of all, we know that's a strong resistance level. Okay, we've had this big move up and price is rejecting. So market is making lower highs. You can, of course, trade short as well if you want. In this instance, this looks like a bit of a bull trap. So a bull trap being that buyers have seen this move go upwards, okay, and they're looking to buy into this move, as I said, but they're buying in at the wrong time. So what happens then is those who bought in early, they look to take some profit, okay? And the buyers who were in early taking profit, along with the stop loss of those who were buying at the high get and taking out, causes this momentum shift to the downside, or this bull trap as it's known. And you can see price does fall down. Okay, lots of indecision here in the market with these choppy candles. But once this support line's breached, you can see there from that big drop that it's quite a significant move to the downside. So potential counter trend trade there on the reversal. Then what we can do, as I said, we know this resistance level strong. Okay, so you can wait for price to breach it as it does here. So we have a breach of that resistance level, either trade on the breakout of it. Risky thing about that is we've already had these big bars in an upwards direction already, so you might just want to wait for the pullback, and you can always enter on the pullback, either the pullback to the line or a pullback and then a breakout. it wouldn't be the worst trade in the world. You can see from that big breakout candle there. Probably some traders were doing that, especially as the market is again making these higher lows. Okay, this candle there, you got a hanging man, a bullish hanging man. So that bullish hanging man around that resistance come support level could have been a good indication to perhaps hop into the uptrend there. More aggressive entry again if you hone in. If we hone in, we can see that there's higher lows there. So the uptrend was starting all the way back here. And then we could have just drawn our resistance and jumped in on this breakout there. As you can see from that big candle, probably a lot of traders were doing just that. If you want to be super aggressive about it, there was even a potential entry there. And you can see that resistance, big breakout there, became support here. So it's a strong level. Even if you didn't take the breakout, you could have waited to see if the resistance held up as support, and it did. By the time you've seen it hold up 3 times, okay, with price more or less bang on that level, you may have considered just buying on the reversal there on the pullback. Okay, especially as we have the higher lows here as well. And just keep an eye on your candlestick patterns. We've got some engulfing and inside bars here, so lots of bullish signals. Yeah, okay, so that's a way to get into the trend early. Even here is quite early when you look at this move. Still, if we zoom out, I mean, down here and here, ample opportunity to enter on this particular uptrend. And as we see the trend continue, so we know we're going to trade long because we're in an uptrend. We're not going to sell against the tide. You might consider selling at the high around here somewhere once you start to see this indecision, the market making these lower highs. But in this area, we're going to look to buy. Ideally, we're going to want to get in early, aggressive or conservative, or with a conservative trade. That being said, you can also, you're not going to be too late for the party if you just wait for a pullback. Okay, you can see price consolidating in this channel. Price consolidates here. You've got a nice wedge formation there, and eventually a breakout to the upside. Resistance becomes support, and that's why you see this big candle here. Traders realize that and they jump in on this trend, and that's a way to time another entry there into the trend. If you miss that one, you certainly are trying to be late to the party, but you can of course just wait for other pullbacks. There will be opportunities. A pullback here. Okay, on this pullback, this resistance, once it's breached, becomes support. No coincidence. Okay, see, resistance, breakout, resistance is support, continuation. Okay. Here you might be risk buying high, too high. Ideally, you would have wanted to be, you know, on your toes and ready to move around here. Arguably here, just go cautious. It's still a good trade, but if you keep trying to enter, you're going to eventually end up buying at the top if you're not careful and you're mid to short term trading. And as you see this, you know, big drops like this, okay, price quite far away from the trend line up over here somewhere, you might want to just sit on your hands. And ideally, you know, you would have been in a trade round here and you'd still be in it, just trying to maximize the move as much as possible. Perhaps your stop loss, let's say you were taking this trade here or even this trade here, your stop loss, you could have just put below the lows on the way up. So below here, below here, below here, below here, below here, below here. Even below here now, you could be locked in the trade with your stop loss around here, around this area somewhere. So worst case scenario, you've locked in all of that profit. If you get taken out, you know, you've still made a substantial amount, hopefully. And then just be cautious of getting caught in a bull trap. Okay, basically a bull trap is, you know, when you try to if you end up buying too high, okay, and then those who bought earlier are taking profit, so that causes a downward shift. And stop losses for those who bought too high are getting taken out, so the market just drops. But it'll be interesting to see how this plays out. As you can see, this strategy requires nothing but good price action trading, and it's just simple support and resistance trading in line with the trend. Okay, we don't need to overcomplicate things. You can of course use fancy indicators if you want, or basic indicators. Just put a 50 moving average on the chart there, and just trade long when price is above, or consider perhaps trading short if price is below, but always keeping an eye on support and resistance levels. Okay, personally, I don't think that's even necessary. And then with the moving average, the question is what level moving average? So that's a 50. Some may use a 200. Okay, some may even use a 14. So it's really open to interpretation. Some may use multiple moving averages, even look for a crossover moving average as a signal. So if we put, say we put a 50 moving average on the chart there, and some traders a golden cross. So when the 50 crosses the 200 above, that's known as a golden cross. So it can signal a big shift to the upside. Just when it crosses below is known as the death cross. Okay, but as you can see, it doesn't always play out as planned here. This cross, you're going to be selling low, but that's why we look at the overall picture, which is an uptrend. Okay, if we just zoom out and look at the bigger picture, we may have only been wanting to take long trades in this scenario anyway. And of course, don't clutter your charts too much. Okay, just simple. And anywhere from here, if not before, going to be looking to place buy trades. And then that way we just need to mark our support and resistance, trade on breakouts or pullbacks, and we have a solid strategy, provided we use good money management and have good trading discipline. Of course, if you're a scalper and you want to try and scalp a few pips here and there, you can always counter trend trade as well. I just feel like if you can capture big moves like this, I'm not sure why you'd want to, especially if you're going down to the 1 minute, 5 minute charts, stress yourself out trying to scalp a few pips here and there when you can just trade long-term chart timeframes and capture big moves. Less time chart watching and hopefully more profit in the long run. Okay, hopefully that's clarified this, as we say, naked chart trading strategy. I'm giving you some ideas you can implement within your own. As I said, you can use it on any trading platform, any time frame, and any trading instrument. I do appreciate you watching. If you could like and subscribe, that'd be great, and I hope to catch you on the next one. Take care.